Hello to everyone. Thank you very much. I will be quite fast just because breaks is nearby, and there is also nearby the stand of EFET, which I ask you to join. I thank you very much, the colleague which have preceded me, and especially one of Wood Mackenzie, because they've taken out one graph out of their site. And I think they were very well introduced also this matter. We're talking about a little bit about price drivers of the PPA market and see how the CPPA, which is the contract which is for free, I underline for free, you can download from our EFET site, is considered on. We will run about definition, business model, rationale, CPPA, and the market. What is a PPA? PPA, briefly, is a contract which has existed for decades. It's a contract between two parties. One is producing, the other one is generating and selling electricity. At the era, or during the era of the monopolies, this was quite used. While corporate PPA it become to be a little bit more interesting because it's the businesses that source electricity from generator, and the generator is able to sell to this corporate just because they are reliable, granted a stable price. This basically means that through this contract you secure your cash in along the years, and basically this is a sustainment for your investment. So it's not only power to consumer, but also is a matter of financial. And then during this period, we arrived at the era of utility and corporate PPA, and PPA today are necessary to be in place in order to secure financing for a bank project, example for a renewable source. The purchaser and the utilities are attracted obviously by lower price and green credential. We will see later on what does it mean. And PPAs are a particular contract, a contract for a very long period, up to 15 years. I would say we should consider, there is not obviously a clear definition, a PPA contract which is above 5 to 7 years. Why above 5 to 7 years? Just because there is no forward curve after 5 years. Background. Obviously, European policy is pushing for sustainable energy mix and renewable, decentralized, unpredictable generation. So, new type of investor market participant. Only 20 years ago, 25 years ago, when I joined the market, there was a lot of former monopolists and big company. As of today, the market is much more fragmented, and also the consumer, they have a role, and also this role is pushed by the European Union. And then, new market, new participant, new risk, and new commercial interest. And some of these can be obviously softened by one standardization of a contract, because we are talking about market, we are talking about investment, but in between there is a contract, and the contract is something that explains the relationship between two companies, two actors. Basically, one of the most famous pictures is this. These are the business model that you can find out in Italy, in Europe. I would like to just only underline number 12, which is a cross-border PPA. It's not so easy to be produced. And also the number 15, which is the guarantors of origin. This maybe is the simplest one. This is a picture that you will find out all around some other presentation. It's the way of trying to characterize all the contract. It's difficult to insert the whole part of the word inside of one contract. But basically, these are the biggest source of the PPA. Then we have two different type of contract of business model. One is physical and the other financial. Obviously, on the physical side, there is a physical exchange of electricity. On the financial side, there is basically a swap of price differential or something in this. Which is the most used? I don't know. You have to adapt to your situation. Maybe in some of this there are less requests of collateral, maybe higher. So it depends really on the two counterparty. Then the rationale. What are the drivers? When I draw this picture, I thought, wow, I'm drawing something which is the capitalism, because out of these two balance, on one side we've got the social responsibility, and on the other side we've got economics. At the very beginning, I didn't put economics, I put margin, profit, but they say, no, it's a bad word today, so let's put economics. But this, well, as of as from my point of view, as personal point of view, is the only two things that move one PPA. It's not the only one, but I would say they are the biggest category. Who are the parties that is involved? This is the process that we follow in EFET in order to find out this standard CPPA, corporate PPA. So we put together the producer, which are utilities or single developer. We put together the off-taker, which are still the utilities or the traders, our federation, and so on. Then there are the lender, which basically are the bank or financial institution, and at the end, we have the final customer. So the process on that which followed was this. We identify inside of the market, because the federation is covering almost all Europe, we identify into the market the needs of having a standard contract, a PPA for, let's say, basically renewable, corporate PPA. And since we have identified all these actors involved, we started to deal internally in order to identify producer and off-taker, which are because most of the cases, some utilities, they also produce. What are the needs of these two parties? Then we say, no, we want also to invite the final customer. And in fact, we made this, we arranged this CPPA working together with a platform which is called Resource. Resource is a platform which has inside Wind Power Europe, Solar Power Europe, so the producer. We were part of the businesses too, and also some final customer. Not only the big guys, as we used to talk about, like Amazon, Facebook, no, because these are different. They are there, but they are special, I would say. But also company like, as far as I remember, Heineken, IKEA, so really final customer. And then the lender. We've been talking about this contract with the bank, and we identify. And we will see later on, very briefly, because I really invite you to join the site www.efet.org in order to download the contract. It's quite easy. The contract is, let me say, based as the standard EFET contract, which is the most useful contract that we use in Europe in order to exchange either electricity and power, and is based on an election sheet where basically we have identified all potential risk, all potential part of the deal, and some solution. So you simply tick the solution and so on. This speeds up a lot of the procedure because you don't have to talk with a lot of lenders, with a lot of producers on the same matter. These are the parties directly involved, but I would say that in this process there are partly indirectly involved, which is EU through the directive, national policy, the national authority, and also the TSO, because it's not the minor impact. This one means that we are in a market which is evolving much faster than in the past. I can tell you that in 2001 the market was not easier, but it was not so fast as it is during these days. And this is also a matter of the world, where is going fast. Social responsibility. The social responsibility, in a certain sense, helped the transition. Which kind of transition? One professor of Bologna, I'm Italian, sorry, I refer to my country for a while, and made a book. He produced a book where he tried to demonstrate that for every fuel switch, you need tens of years. Basically, the world moved from the wood into coal in a period of about 100 years. About is difficult to define. We cannot say that 1492 is the end of the Middle Age, start of the Renaissance. It's just an indication. Then coal to oil, it takes exactly more or less the same time. And then oil to gas and gas to renewable, maybe it could take the same period. So what we have to do is to pushing in order to increase the speed of the transition. And investment, does investment help technology? Yes. This is a parameter that our colleague of Wood Mackenzie know very well, which is LCOE. It's called levelized cost of electricity. One of the parameters, not the most important one, but basically this parameter tells at which price an investment in power is sustainable. Sustainable not from let me say, the social point of view, but from the economical point of view. And it takes in consideration investment expenditure, operation and maintenance, fuel expenditure, which are basically nil, and the expected lifetime. And due to the help that we have produced inside of the market in the new technologies, then we have seen, I've taken one report which is coming from Lazard. I take it out of the internet, but this report shows exactly more or less the same picture as the other. This means this shows that the LCOE for wind production has decreased in a very deep way, but solar even further. Obviously, the LCOE we cannot go to zero, but we see that in the last 10 years there was a huge development. This means basically that these two sources of renewable, do apologize for biomass and so on, I concentrate on for the time being, just for a matter of quickness on wind and solar. This means that it's much more easy today to think on wind and solar investment into the market, because the market has a price, I would say, as a producer revenue that sustains this investment. Then this is, I would say, I try to figure out and to summarize and to simplify as much the rationale of a PPA. With the rationale of a PPA, we have 2 points of view. The point of view of the producer and the point of view of the consumer. Instead from the point of view of the consumer, the risk is an increasing cost of supply. So it's the red line. I sign a PPA, which is the dotted blue line, just because I think that the price could rise up. So I secure one lower cost of supply. On the other side, the risk for the producer is that the price will go below the LCOE, so the minimum price at which my investment is sustainable. This basically means that I'm worried if the price goes too low. At the end of the day, high forward price are good or not for this scheme? It depends. It depends because with very low forward price, with very low, let me say, expectation of price, it's difficult that a power producer, a developer, will start to develop a plant because there is not enough space for his LCOE. On the other hand, if I wear the shoes of a consumer and I'm in a period with a very high price, then what is my thought? My thought is, well, maybe the risk is that the price will go down. So the producer will be very happy, but the consumer start to have some doubt. So there is I cannot say why, just because we are a federation, so every company has to do this on evaluation. But this means basically that there is probably a fantastic range within which the PPA are very well accepted. I'll give an example. As far as I remember, beginning of 2018, the price of electricity in Europe, in most of the important hubs, were were lower than they are today. And in fact, I've read on the news that there are a consumer, I think in northern part of Europe, that they signed a PPA for 15 years. And the reason was we lock part of our supply cost at a price which is good for us. While today, the situation is becoming a little bit different, and we'll show you later on. This is a report which has been produced, which has been shown by Resource, the platform which I mentioned, that shows the economics, which show the fact that the economics is the main driver for most of the active corporate which has been interviewed. So 92% sourcing renewable to reduce energy costs. So it's on the balance, on the economic side of the balance. But the drivers, if we see on the graph below, we see that there is a corporate social responsibility and the economics of renewable energy very close. So this is also something that comes from the market, and this mix together the needs of a producer and the consumer. In between, there is the market, and above, there is some other, let's say, bodies, which we'll mention later on. The framework and the precondition of a PPE is decreasing LCOE, and we've seen that that's the case. Demand for large consumer for long-term PPAs, because this will help the hedging strategy of the off-taker. Expectation of sufficient power market revenue to cover the LCOE, that is clear. not a lot of support scheme, because otherwise the producer will go, obviously, to the support scheme. And then, least but not least, trust from bank and investor, because also they have a part on the picture. I will go quite fast on this graph. This graph simply shows that the number of PPA has been increased since 2008 and 2018. There are much updated graphs which I suggest you to see and jump into the internet. It's quite easy. Then, which risk can be managed through the contract? And most of this risk has not been obviously clearly identified, but they've been identified as a potential. Obviously, the market price, profit loss, the shape risk, the short-term balancing risk, and so on and so on and so on. It's possible to mitigate the risk? Yes. We will do a fair evaluation, but the value of PPA is impacted. Who can take out a part of this risk? Off-taker, power exchange, and in fact the power exchange has been asked to prolong the horizon of the future. At the beginning, when the power exchange was developed, there was a big spot price, and then after the spot price, you've got the future. The future was covering 2 years. Then a lot of generators came to some of the power exchange, I was there, asking for increase the length of the horizon covered, just because they want to do an investment. Then the market has changed. Long part of the curve is becoming less interesting than the short part of the curve, and we've seen from our colleague Wood Mackenzie how much is the work that has to be done on an hourly basis in order to balancing the system, because with the non-predictable production of the renewable, that this is the new need. But now again there is the need to prolong, to increase the length of the future covered by the power exchange in order to give price signal. And price signal is something that reminds me of the very early beginning when the power exchange were established, just because the market needed the price signal in order to operate. I've just identified some of the PPA benefit for a developer or generator. You will find out something which is quite familiar with you. I would say that on the fourth path, which is diversification of income through multiple CPPA, this brought me the idea of the green aggregators, which is a new incomer inside of the market. And if we think on the slide that I presented before, is exactly this. New people, new type of business are coming inside of the market. This is the side of the corporate on the corporate side, and I would say I think this will be published into the internet site. And if you want to be more precise, as I said, there is our stand just behind. There are two other boundary conditions: grid development and market development. Okay, market development, we've spoken. I just will give you some hints, because the colleague that I've done the presentation, and believe me, there was no agreement. I mean, I just brought the presentation this morning. I was not absolutely aware of what they say or what they were near to present, but this is absolutely interesting for this type of discussion, which is a little bit more higher. Well, I'd say two other boundary conditions. Grid development. Why? Because the grid in Europe, I go to the basic, was thought in order to connect one big center of production, centralized, like a big nuclear power plant, a big coal-fired plant, a big gas-fired plant, with a single, well, let me say single, I simplify, center of consumption, a big town, like a big city, or a big industrial site. And the line has been built up just with this idea. Our grandfather that built this, they were not, let me say, unaware of the fact, but just because the world was different. Today we have distributed generation, intermittent generation. That means that the grid maybe will have to be, let me say, renewed in a center in some of the key part of in some regions, some key part of the grid. And the decommissioning of nuclear, especially maybe in Germany, is not my country, so I don't want to spend a lot of word about this. I know that will produce a lot of discussion about this. In addition, there is one fact. In the past, I say only 10 years ago or 15 years ago, which is really near past, the transmission system and the distribution system was almost connected, and it was one system. today, with the fact that the sum of the intermittent renewable generation is not connected to the high voltage grid, maybe the high wind farm, the big solar farm are connected, but the other are connected on the medium and lower voltage grid, this has brought some problems with the local DSO. And spoken with some of the DSO, some of them are thinking maybe to work on island. What does it mean? Northern area. Something close to what happened in US. In US, if you buy electricity, Philadelphia means that you will deliver baseload Philadelphia in the hub of Philadelphia. And so the idea of the hub is changing a little bit. But if we decouple, in a certain sense, transmission and distribution, and we produce a sort of local, and that's why EFET is quite interested on this aspect. We produce a local hub, a local market, then we have to be very careful on this market. The market obviously is not unlimited because, as we say, the cost of the value of LCOE on the renewable energy you see on the upper part is comparable now with the cost of the thermal plant. For some of the renewables. So this basically means that there is competition. But, and I link with the presentation of the colleague Wood Mackenzie, something also happened to the market because someone said that green growth to curb Spanish power price. I'll let you to read. And the other one say that someone, I take it out, the name is not correct, criticized PPA of takers for driving price down. And we are back on the balance, social responsibility and economics. So the market is volatile, yes. And I have again to say sorry to the colleague Wood Mackenzie because I've used this graph, which is quite interesting, that I've found out also on the internet site, that shows what the national target of the renewable share and the one of Wood Mackenzie. In 2030. This is quite interesting because if this is true, means that what we've said before, so development of the grid and development also on the regulation that there is in around has to be absolutely be considered well in advance. And development of the grid is one of the key parts of the overall picture. So basically, we say that both drivers are needed. The non-regulated stakeholder, as I think most of us are, knows what to do, but there is also a lot of things that have to do by the remaining regulating and regulated part of the market. Thank you very much.
Thank you very much. We're out of time, but we want to ask one question. So one very.
Thank you very much for mentioning the reference, which are quite widely spread along different consultants or McKinsey or PwC with the price growth indicator. In your slide, you show that there are a lot of customers who are thinking that they are better than the market. What was the reference or index which you used to make this indexation? Can you please specify? And whether market has some maybe more fairly forecast of power price. We all see this line go into the skies, but you remember 2016 when there was no indicators and the price fallen. So I do not agree that it will go sharply to the sky and there will be no, like usually, the fluctuation of the market. Thank you very much.
Obviously, I do not have a precise answer. I'm thinking on how to deal with the PPA. It depends on which kind of company you are dealing with. If the final customer is a very healthy company that maybe, I don't know, just for an example, has 20% of margin out of the turnover, and so they are quite, I use a bad word, rich, then they care up to one point to the cost of electricity. So let me say they're probably more pushed by the social responsibility. So it's something that it's managed in a different way by their risk manager. On the other hand, if we consider a company where the cost of electricity could have an impact, as an example, at 40% of the final price of their production, then this means that this company, they are not worse than the other, but simply they have they live in a different market. Then they care a lot about the cost of electricity. The example they brought before goes in this direction. I would say that the market will fluctuate, and probably, I don't know, no one can say that if there will be zero price, which doesn't means simply there's no market at all. There will not be maybe 100 euro of price, but in between, depending on a lot of factors which are difficult to be forecasted at the moment, then the price of the electricity could vary. And maybe one, let me say, position could be that the risk manager accept the fact that you will lock through a long-term PPA, let's say 10 to 15 years, 1/3, 1/4, 1/5 of your overall needs, so that you have one position risk which is valuable, and it does not have it will have a good impact on your balance sheet, but it will not be matter of discussion with your boss.
Okay, we have to stop now. I know there's another question, but maybe in the coffee break you can ask him. Is it a quick question?
Yes, I am the end user, so generally the other side, and Central East Europe, where we have a problem that the prices for renewables approximately double than the market price today, and this helped with some feed-in tariffs or some other form of support. What do you think? How we will be working this system? Because this is not a real price in that cases for the support of renewables.
Well, this is quite interesting question, because I've spent almost 8 years, 5 years in Sofia working on the eastern part of Europe and a lot of years in Greece. I would say that I was quite surprised up to one point that I've seen in the last 3 months that the price, maybe 4, the price, one of the price reference in the eastern part of Europe, which is Hungary, was higher than Italy. This depends of the market. This depends on the market structure. This depends on the liquidity of the market, and this depends on the maturity of the market. I mean, it's up to everyone try to optimize the portfolio. There is no crystal ball, and in this part of Europe also, the impact of the national legislation, the politicians, and the national regulatory authorities are quite huge. For a lot of years there was no power exchange in Bulgaria, then in 2 years it appears and now gives price references. For a lot of years there was an exceed of, or it looks like an exceed of production in Romania due to renewable, and now Romania is importing from Bulgaria. It was a reverse case in the past. Frankly speaking, it's not so easy to give you one answer, because there are a lot of factors. But I would say that if a lot of company, and more, we've seen the numbers, they are signing PPA. PPA means simply that they will purchase green electricity. And if European Union will succeed in pushing this, be the first comer, it could be very interesting.
Thank you, Andrea. Okay, thanks for your patience. It's coffee break time. Please do, firstly, thank you to the speakers so far. Please do come back after the break, where we have some talks on the technical analysis, a bit of a different perspective, and short-term market perspectives for the coming winter. So I will see you back at around 11:30.